Yeah, good day to you. Good morning, wonderful people. My name is Ajana Komuiwa, your Forex coach. We are live this weekend. Sorry, this week again. We will always be coming here every Tuesday, 7 a.m. to 8 a.m. Nigerian time. And last week, we actually didn't spend enough time. Even though we said 1 hour, well, in 30 to 45 minutes time, we should be able to do as much as we can do. So let's get into the chat. First and foremost, if you know there is any pair you like us to trade, there is any pair you like us to look at, please drop in the comment section. And if you are hearing me, please type in the comments, I can hear you. And if you can see me, type in the comments, I can see you clearly. And if my audio is clear, please type your audio is clear. Please go ahead, so that we move into the chat. If I am clear, please let me know my audio, my video is clear. Just tell me to proceed so that we proceed into the chat. If possible, introduce yourself, your name, where you are actually chatting from, where you're actually watching us from. Let me know. Okay. Okay, Ki Oladele, that's my man, Israel. He said he can hear me and it's good to hear from you guys again. All right. Without further ado, let's go into the chat. So let's share our screen. If you can see my screen, please type I can see your screen. I just want to be sure you guys are seeing my screen. If you can see my screen, please type I can see your screen. I don't want it to be like last time. I didn't know I was not actually sharing the screen. Please type I can see your screen. If you can see my screen, I want to be sure you guys can see my screen. Please type I can see my screen so that we proceed quickly. Can you see my screen? I'm not hearing any comments. Let me assume you guys are not seeing my screen. Can you see my screen? I have shared it. Please type I can see your screen. Please type I can see your screen if you know you are seeing my screen. I want to be sure I'm projecting the screen. Or you can't see the screen. Somebody said no, no, no. What's happening? Okay, coming. If you can see my screen now, please type I can see your screen. Please type I can see your screen so that I can proceed. I want to be sure we're all the same page. Please type I can see your screen. Correct. Guys, let's proceed. Let's start with JBP USD. JBP USD, one of my favorite pair. And if there is any pair you want me to look at, please type it quickly. For those of us who are trading prop farm, who are trading real accounts, whatever pair you want us to trade, please type it quickly so that after this we just look into it. And there is a link in the comment section. Please share to your friends. Now, first and foremost, I like what I'm seeing. We made this last week. JBP delivered as we wanted to. It delivered. It delivered. And due to the news that came up on Friday, we can see it delivered our full TP. And this thing ran throughout the whole of last week. In fact, it has started from 2 weeks ago, since Thursday. You see, we predicted at this point, this was a stop. We predicted that GBP would drop, and you see it came and it dropped massively. For those who took this trade, I'm sure they must be a massive profit, or they must have passed their prop farm account, or they must have raking little profits like I did. So this was JBP last week, and there was a news that actually came up that pushed this forward. But let's look at thorough analysis of JBP afresh. Let's clear everything we are seeing on our screen and start afresh quickly. Looking at the daytime frame, what is GBP USD saying? What does it have to offer us? Our great British pounds. We can still see clearly at this point that GBP USD is actually in an upward trend, and it has been is an upward trend. Let's look at what we have here. This is actually a break of structure there, another break of structure here. We've told us the most important thing in technical analysis is even market structure. Market structure, if you are technical analysis, market structure, then overall your psychology and your risk management matters a lot. But when it comes to technical analysis, market structure is key. This is another break of structure to the upside, and that's another break of structure to the upside. And we can see at this point on the daily time frame that there is a liquidity that has been created here. Liquidity has been created around that section, and we are looking at price to come to this coming. We are looking at price to come to this order block if it can in the long run. I mean, in the long run, price is here. Okay, but this is what we are seeing on the daytime frame. But as intraday traders, we know that we do not trade on the daytime frame. The best we can look at now is to look at our how we can take position on the lower time frame. Now, looking at this structure, we can also see at this point here that there was a change of character. There was a change of character. At this exact point, there was a change of character, which some of us call market structure shift. There was a change of character to the downside, which some of us call the market structure shift. And when we look at the change of character to this downside, we can see that the market came here to test this order block. Immediately the market tapped into this order block, the market started jumping. The market started is about coming down. Immediately the market come to this order block. This is the order block. Let me make it clear. This order block, the market tapped into it on the daytime frame and it started reacting. So this order block we are seeing, what are we expecting? We are actually expecting that on the 4-hour time frame that the market is going as it has been doing, and it will come just as it is doing. We expect the market to come to this point. But let's look at what the 4 hours time frame is saying. The 4-hour time frame. The 4-hour time frame. What is the 4 hours time frame saying? Now, on the 4-hour time frame, we can see that market is still reacting here. On the 4-hour time frame, we said, just like we said on the daytime frame, we expect the market to come down here. So at this point, we are looking at, because the market is already coming down, it is coming down. And I just want to believe there will be an instant position here. On the 4-hour time frame, if we adjust our order block, we will see that this is the order block that the market is respecting on the 4-hour time frame. And immediately tapped into this order block, it has started going down. And on the 4 hours time frame, you can see that there was a break of structure here again to the downside. And what happened? The market reacted to this. The market reacted to this order block. And from this order block, the market started coming down. Okay. This is an order block. This tiny one the market is reacting to is another order block. This is a change of character to the downside, or what you call the market structure shift. This is the market structure shift. This is the market structure shift. And this is the order block with which the market came to react from at this point. Okay. And if we can look at it clearly, the market tapped to this other block and it is coming down. So like I said, we would like to join, and it looks like we may join now. It looks like there might be opportunity for us to also join now. So what are we going to do? Let's see what the 2 hours time frame is saying, because the market just tapped into this 4 hours order block and it is actually running down. What is the 2 hours saying? Are we on the same position with the 2 hours? Let us check it out. Now on the 2 hours time frame, yes, you on the 2 hours time frame, if we can see clearly on the 2 hours time frame, we can see that the market had another break of structure here. Very tiny one, another break of structure on the 2 hours time frame. And because there's a break of structure there, we anticipate that the market will come and test this other block soon on the 2 hours time frame. Market is likely to come and test this other block, this particular other block. This particular order block. We expect the market to come, tap into it. What is the 4 hours, 1 hour saying? Let us look at it clearly, because we are monitoring this trade. We are monitoring this trade. On the 1 hour, we can see that there's another break of structure here. Tiny one, very tiny one. And we can see that market will still respect. And we can see that at this point, market respected this other block. That's why the market came down. We have to be taking it gradually. So this other block was respected because we want to see how we can, just take a sell downwards. Now, this is 1 hour. There is another block. There is a break of structure. This other block that caused the break of structure. And what happened? Market tapped into it. I'm sure this must be the news that actually pulled up late last week, and the market is reacting down. Now that the market is reacting, let's go to 30 minutes to see if it's the same. This is 30 minutes time frame. This is 30 minutes time frame, correct? We can see that. In the 30 minutes time frame, what do we do? 30 minutes time frame, we can spot this liquidity here. So we're expecting for a liquidity sweep. And so since we're expecting liquidity sweep over there, what is 15 minutes saying? Because we are likely to get an entry very soon. Let me adjust this in the 30 minutes time frame again. Now, what is 15 minutes saying? 15 minutes is suggesting to us that should the market clear this liquidity, we should prepare to sell. And you can see it's dropping. Should the market clear this liquidity, we should prepare to sell. Now, let's assume if the market go as we expect, clear this liquidity down, we have to wait for it to come and tap into this other block, then we will now sell and sell downwards. So we will be waiting for that to happen. And if the market plays out according to what we want, we should be taking our nearby profit at this sell side liquidity. So what are we saying in essence? Should the market go in this direction, all we need to do, if it closes here, we might consider taking this trade from this tiny order block. And should that happen, because we are really expect it to happen, following this market structure, we expect that to happen. Following this market structure, we expect that to happen. It means we should come for a juicy sell. There should be opportunity for us. We should be able to enter the market at this point, pick profit immediately as it presents itself. We should be able to take some profits today. And of course, we expect the market to still go farther than that. Now, if the market eventually break through, we expect the market to go farther than that. But for now, this is the immediate profit we are looking at. This is the immediate trade we are looking at. And that trade will only be possible if the market if the market closes below, then retest this other block, immediately retest, we take our sell and we come down here. And we expect our profit, our stop loss to be here. And should we take this trade, how many pips, how many profit are we taking? This is like actually 72 pips. It's fine. 72 pips is not actually bad. This wonderful Tuesday morning, that's a juicy setup. 72 pips is not actually bad. So if there's any pair you actually want me to analyze, please let me know before I move on to the next one. If you know there's your favorite pair, of course, we'll also be touching synthetic indices. Quickly, I actually also want to look at gold. What tidings do we have from the land of gold? What tidings do we have from the land of gold? Let us see what gold is saying. Let's see what gold is saying. We just finished our analysis of GBP USD, and we said GBP USD. This is the GBP USD I'm saying. Please take note of this coordinate for GBP USD is about to fetch us like 72 pips very soon. Coordinates of this GBP USD, this is the entry point, 1.34645 entry point. Our target profit is 1.33915. You can screenshot that. Our target profit is 1.33915. 1.33915, and our stop loss is 1.3478. So this is the setup we are looking at for GBP USD. All right, let's go to GBP JPY. If there's any pair you guys would like us to look at quickly, let's look at the second pair because time is actually moving on. Want to look at second pair. I want us to look at GBP JPY, or is it gold? Let's look at gold. Oh, why is it not bringing gold? It said gold, XAUUSD. Gold, what is happening to gold? Let me reload first. Want to look at gold. If you have not taken the screenshot, you have chance to take the screenshot now. Take the screenshots. This is our mighty gold. Let me still go back to GBP USD. GBP USD. This is our setup for GBP USD. Our wonderful setup for GBP USD. All right, this is a wonderful setup for GBP USD. All right, quickly, let us look at gold. Where is gold? This is our mighty gold. This is our mighty gold. We can see from the daytime frame that gold is still what? Is still rallying up. In fact, there is a news that just came up of recent that Trump just fired himself, and it has been making gold to spike up. But let's look at what the technical analysis is saying on our gold. On our gold, you can see that if you look at gold for some time now, I've been saying this, gold has been ranging, has just been around this resistance zone. Gold has been around that resistance zone for the past 2 weeks, 3 weeks. That is resistance, and this is a support zone. Gold has been around here, and it has been different, and they're making it a little bit difficult to trade. We have been trading gold with caution. We have been trading gold with caution. Gold has been around this this resistance and support zone, not just weeks, from when it has been since April. So we are taking caution trading gold. However, we have been trading it. Now, since it has still, because we can see it touched this support, break a little bit above it, push it up against resistance, support, and resistance. But we know that we with our strategy, we must look for a way to catch this move and take our share from it. So the latest we can see from here is that gold has left here and is going up, but we need to look for a way to join. We need to look for a way to join. And if we can see at this point, let's go to 4 hours to see a better structure if possible. Now, if you can check from the 4 hours time frame, after gold tapped here, we can see that there was a change of character, market structure shift in the 4 hours time frame, and gold came down. Now, when gold came down again, we saw another market structure shift here. Again, gold came up. We saw another market structure shift there. Gold came up. And after gold came up, we could see that, technically speaking, this is actually the latest break of structure we have from gold on the 4 hours time frame. And if we check this break of structure, we can see that this is the other block that caused this break of structure. That is one point of area of one point of interest we have. And if we also look at where this other block overlap, it actually overlaps with this mitigation block here. It overlaps with the mitigation block here. And what you notice is that price gold tapped into this mitigation block and it has gone up. So it means out of these two points of interest you have here, both the mitigation block, this is the other block, and this is the mitigation block. This is the mitigation block. They were interlapped together. Now, gold tapped into this mitigation block and it has chosen to rally and it has chosen to begin to go up again. Now, the latest move on the 4 hours time frame is that gold now created another break of structure here. And because break of structure has been created, we can also see that there's another immediate break of structure here again. But we know as professional traders that gold we prefer to come and select this other block. If it will come to this other block, it will still come and retest. We expect gold come and retest this other block. And of course, it may look complicated. We can see a huge fair value gap here. We can see a huge fair value gap here. And we can see that gold has already retested this fair value gap. And I've told us that from experience, gold normally prefers, gold normally prefers to react from the fair value gap even more than the other block. So it means that gold has already reacted from this other block. So what do we do? Since gold has reacted from this other block, it is going up. I can see from what we are seeing here that gold is coming here. This is where gold is coming to. This is the buy side liquidity that gold intends to take. But instead of looking at that, I don't think I'm interested in taking all these short buy. Let us leave this. Let us leave this and go to a 2 hour time frame. On a 2 hour time frame, what do we see? On a 2 hour time frame, we have seen this. On the 2 hour time frame, left to me, if I will take this trade, those who wants to join can join, but I will not. I will wait to see if gold will come and test this order block. Even though from experience, gold normally prefers fair value gap because there is a huge chunk of fair value gap that is yet to be tapped in. This is actually consequent encroachment of the fair value gap. This is a consequent encroachment of the fair value gap, but I still want to believe that there can be a fully filled fair value gap. There are three types of fair value gap: institutional order flow drill, consequent encroachment, and the fully filled fair value gap. I wouldn't join here. I will wait for gold. Even if I would join, let's see if it's not even on top of it. No, I wouldn't join. So I'd rather wait for the gold to come. I'd rather wait for gold to come. That is, if it will come, tap into my order block, then I will take the buy up. I'm not going to take this trade now. But if you know you're an aggressive trader, you can take such risk. You can go ahead, but I am not going to take such risk because gold is not an instrument you joke with your money. Gold is not something you toil with your money. However, if with patience and with good strategy you trade gold, gold can fetch you a lot of money. All right, so having seen this, let's see what we can get on the 2 hours time frame, on the 1 hour time frame. Now, on the 1 hour time frame, if I were to also assume, because we are only reacting to the market, that gold will just want to react to this fair value gap, then it means, if that is the case, it means gold is coming for this order block. This is a good point of interest to look at. If gold will not consider yet, this is a good order block that we see that gold may react from. And if I cannot wait for this move, then I think if I can't, even if I were to take a move now, I would prefer to move, take that buy entry from this order block. Let's see what 15 minutes will offer us immediately. Good. 15 minutes is going to offer us something more juicy. This is the order block we shall be working with if we were to join this move immediately. So I will wait for this order block in the 15 minutes time frame. Good. This is better. I will wait for this order block in the 15 minutes time frame and wait for gold to tap into this order block. Then I take my buy here. This is a better move. This is a better move. But what if gold decides? But if gold should decide to break through, price should break through, test my order block, come here, it means I will be taking trade from this order block and come back here. So that's why we need to take with patience. We need to just be careful at this point. Remember that this market has actually been raining for months. And any market that has been consistently raging for months, we need to approach it with caution. So if we are to, let's fine tune this, if we are to refine or redefine our order block here, it means there are two order blocks that gold may actually come and retest, may actually come and take. And I'm also seeing that this order block here might be an inducement. Look at it here. I'm seeing it as an inducement because I can see a good fair value gap here. So this order block may be an inducement for gold to come in, for gold. And remember, we still have a lot. Look at this void. We have a lot of void to fill. So personally, I think I would suggest and not because that's what I'm going to do. It is better we do not take the trade, our money is preserved than for gold and than for our money to be taken out. So I think we should just look at this setup for now. Let's look at price coming here and we take our trade from here. That will be my suggestion for now on gold. So that's what I'm looking at. It means on this particular setup, I am looking to take trade from this point here. I'm looking of taking trade from that point. This is our gold, and our stop loss will slightly be below here because all of us know how gold can do. Just let us risk a little. Risk management matters at this point. A little, and let's see how far we can go. Voila! This is the setup we are looking at. And let's hope how it plays according to this setup. I would prefer to take my setup from here. If price respects it, I take it. If it doesn't respect it, well, fine. The worst that can happen here is that gold can just come here. At most, gold will come here, break through, and come and tap into this mitigation block or this other block. That's just the maximum thing that can happen. Okay, so if that's my position on gold, and if we are to take this trade, we may consider here, we may consider this point first being our first point whereby we will take profit. This may be our first risk to reward ratio, but we may just take note of this, but we know that gold will come here. So quickly, if you are seeing the screen and you are still with me, kindly take this coordinate for gold, set your alert, let us wait, let us see what the market is up to, and let us hope market plays according to our setup. Please, if you are there, take this setup on gold. Take this setup on gold. Let's look at here first. Let us look at here first. And how many pips are we looking at? We are looking at our entry point is 3327.606. 33, this is our entry point, 3327.606. Our stop loss is 3320.400, and our target profit for now is 3390 on the dot. Gold is targeting 3390 on the dot. Perhaps it wants to come back to 3400 as I predicted some few weeks ago. So that is, and how many pips are we looking at? Wow, that's quite much. That is huge. This is huge. That's like 60 pips. It's fine. 60 pips is fine. It's fine. All right, that is it. What we have on gold. Is there any pair you want us to look at? Because I'm just going to look at one more pair, and I'm actually going to move on to. I'm actually going to move on to volatility synthetic indices. If there's any pair you'd like us to tap to look at, please drop in the comments. Drop in the comment for gold. Coordinate for us to buy gold is 3327.606. Stop loss 3320.400, and our target profit is what? Our target profit is 33879 on 3387. Let me check it. Let me check that target profit well, because it must deliver. It has to deliver. It must deliver. Good. Our target profit is 3387.126. 3387.126. Time is far going. Let's look at one more Forex pair, and then we move to volatility synthetic indices. Please, you can take the screenshot. If you are seeing me loud and clear, if you are seeing me clearly, please take the screenshot of the coordinates on gold. Set your alert, watch the trade. Let's take it. Let's put some money in our pocket. And our order block is valid. And this other block is valid because we can see fair value gap somewhere here. Let me even put it here. We can see this fair value gap here. You can see this liquidity sweep here. All right. So let's look at another pair. If there's any pair you want us to look at, please let me know because we shall be running up very, very soon. So we have looked at GBP USD. We just looked at gold. This is GBP USD. We give us the coordinates. We just look at gold. We've given us the coordinates. And let us likely look at GBP JPY. GBP JPY. We look at one volatility pair and then we take a bow. Is there any pair you want us to look at to analyze? Please drop in the comment section. Drop in the comment section. If not, after this, we might close. All right, this is GBP JPY. On the day time frame, what's GBP JPY saying? All of them is still up, 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 up. Let's go to the 4 hours time frame because of our time. On the 4 hour time frame, we can see that the last break of structure to the upside happened here. That is the last break of structure. In fact, I'm coming. That's not the last break of structure. That is not the last break of structure. We can see our breaker block here. This is a breaker block with a market structure shift upwards. That's it. And after that, we can see break of structure. We can see break of structure, and we can also see change of character. After observing that change of character, this is the other block that caused the change of character. And because this is the other block that caused the change of character, if we observe well, price has not actually tapped into this other block. It's to advantage. So we expect price to come, tap into this other block proper, and drive down. And this drive down to this point. Structure will always be, structure will always and always be respected. Can we say there is another other block here? I don't think so. Can we say there is another other block here? Can we say there is another break of structure here? Yes, we can say that. We can say there is a break of structure there too. Can say there is a tiny break of structure there also. So this will be a change of character. And if this is even our change of character, it means we are still in the uptrend. Okay, yes, it means change of character has occurred. Like we said, after all, we see for those of us who trade candlestick pattern, this is a shooting star here, but we are sticking to our strategy SMCICT. We can see that there is a price will still need to come up again. GBP USD will still need to come up, tap into this other block proper. although it has already this this fair value gap has been respected already. But we like trading from other blocks because actually respects gold respects fair value gap most of the time, but GBP USD they always they always go with other blocks. So I still want to not believe from what I'm saying, because I've learned that in Forex, never trade what you think, never trade what you assume, never trade what you believe, only trade what you see right in front of you, and your work is just to react to whatever thing you are seeing in the market. Now, looking at it very well, GBP JPY price will still come here. How long it will take, I don't know. It's going to come here, tap into this other block, then drop down. And this, remember, I said this is an order block on the 4-hour time frame. It has to be respected. So we are not moved, we are not in a hurry. And because of that, let us what 2 hours is saying. 2 hours saying this. This is what 2 hours is saying. Almost the same thing. Out of 1 hour, when it comes to 1 hour, this is the other block we have in 1 hour time frame. This is the other block we have in 1 hour time frame. So of a truth, the move has started. This is the other block, value other block we have in 1 hour time frame. So of a truth, it means price has already tapped into it. Price has already tapped into it. And since price has tapped into this other block, it is going down. Can we see whether a new change of characters, a new break of structure has occurred? Yes, a new break of structure has occurred. Let me see. This is a new break of structure that has occurred to the downside. And we can also see that price respected or this is the other block that caused the break of structure. No, I'm coming. We can see here that this break of structure, we can see that most other blocks have been mitigated. This is a brief resistance point, but if we were to look at it well, don't let us take it from them. Let us stick to our strategy. This is the other block. So price is currently reacting from this other block in the 1 hour time frame. Wow. Let us look at 30 minutes, 15 minutes, then we take position immediately. Good. See, price is actually reacting to this. 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 What of 15 minutes? This, I think, let's even see this from what I'm seeing here. Let's see that. Let us see this as an inducement because I'm seeing things clearly. I'm gradually seeing things clearly. Let's see this as an inducement and let us look at this. The whole of this as an inducement. The whole of this as an inducement. So at what point are we going to take this trade now? We will wait. We'll rather wait for the market to come, clear this inducement. It has to wait for candlestick to close below this inducement. Then there will be another block later. It has to retest, then come back. So GBP will be a good trade. For now, left to me, I will not trade unless liquidity is cleared because I am not ready to be a liquidity. I am not ready to be a liquidity. This is liquidity I'm seeing clearly. Before I will take any trade, I will wait for price to clear liquidity down, retest, then come up. So for now, I wouldn't be doing anything. For now, perhaps I may give you update later. Is there any pair we want us to trade as we round up very soon? Is there any pair you guys want us to look at because we shall be rounding up very, very, very soon. Any peer? Okay, if there is none, let me just look at our one volatility synthetic indices and we round up and we call it a day. Looking at volatility indices. Let's look at volatility indices quickly. This is volatility 25. This will be the last thing we'll be doing for today. And I really like to round up because I don't want to keep us waiting for too long. This is a 4-hour time frame in volatility 25 index. This is a 4-hour time frame in volatility 25 index. And we can see that market has actually been going up, 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 up. And looking at the 4-hour time frame, we can see here that there was a break of structure. There was a break of structure there. There was a break of structure there. And we can also see clear that there was a change of character here. There was a change of character downwards. There was a change of character downwards. And if there was a change of character downwards, where is the other block that caused a change of character? We can see that this is other block that caused a change of character, and market is actually reacting from this other block. Market actually reacted from this other block. Market actually reacted from this other block. Market actually reacted from this other block. Market reacted from this other block and is going down. Now, we have seen that market has reacted from this other block. Market has reacted from this other block and it is going down now. Because of this change of character, which we actually noticed, this is the other block. You expect market to come down. We expect market to come down. Now, what is market actually doing? After this break of structure down, I'm coming. This thing has been giving problem for a long time now. I don't know. It's always stressing me to draw. It's not always straight. I think the drive should really work on this. You can see there was a break of structure here. To the downside. And of course, what did you expect? Market is currently reacting to this other block. Is there any other block here? Coming, coming. There's a valid other block here. There is a valid other block here. The market is presently reacting to it. So we are not going to do anything because we know the market is actually in the short run. For now, market is actually coming down. So what are we going to do? We are going to go to the 2 hours time frame. We want a shift in character to the downward. So market is still reacting. So wouldn't, and if we check here very well, in the 2 hours time frame, we can also see that market is reacting. We say it's reacting from this. Market is actually coming. Market is actually reacting from this rejection block now in the 2 hours time frame. It has done that. market is reacting from this rejection block in the 2 hours time frame, which some of us call shooting star. But we still need to be convinced. Let us look at the 1 hour time frame. This is market structure. We are looking at market structure here. It's still fine. Let's go at the 15 minutes time frame. Let's look at the 15 minutes time frame. Now, perfect, 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 perfect. I want to assume this is a breaker block that is forming. And I want to believe we are going to get what we call a unicorn entry here. Now, we expect market to just close below here for volatility 25 index. We expect that there will be a change in market structure at this point. If it happens, what are we going to do? It might give us a unicorn entry or a breaker entry. We expect that market will close, retest the breaker block, boom, then we'll take a sell down. This is our expectation for now, and we're going to take our target profit at this sell side liquidity. But we need it to be formed before we can take any decision. So hopefully we expect that somewhere around here, if it plays out according to what we want, around here, somewhere around there, we expect a sell. And the condition is that market must play out according to our prediction. If it does, which I think it may likely do, then it is time to put some money in our pocket. Any question before we round up? Once again, this is our coordinates for GBP USD. GBP USD. We said we expect that the market will come and retest this other block one more time. One is those that will go for a sell. This is gold. Gold. Let me set the coordinate well. This is gold. This is GBP JPY. We said for GBP JPY. We said for GBP JPY is loading. We said for GBP JPY. What do we do for GBP JPY? We said for GBP JPY, we said we want market to come and clear liquidity retest before we take a sell. That is it. We said we want market to come and retest, and for volatility and for our synthetic indices, we have also told us what we expect, what we are expecting from the market. What we are expecting from the market. I've told us what we are expecting from this market. I've told us what we're actually expecting from this market. All right. I want us to stop sharing all screen. That will be all for today. Thank you very much. Hope to see you guys next week, same time, 7 o'clock. If there's anything, any comment, please, you can drop in the comment section. Hope to see you 7 o'clock every Tuesday, Nigerian time, 7 to 8 a.m. as we go through the market. And I wish you guys a profitable week. I remain once more Ajana Komu Iwa Adewale, and thanks for tuning in. Bye.